What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks, and most importantly, how to get you access to high limit credit funding. So in today's video, I wanted to share with you guys the power of leveraging business credit. So one of my favorite business credit vendors is Sam's Club. So for those who don't know what Sam's Club is actually owned by Walmart. And Sam's Club is a membership club where you pay an annual membership fee, and that gets you access to products at a very discounted rate. And usually Sam's Club prices are going to beat out most other retailers. They have a wide variety of different products and services for a business to use. Now, one of the things that I usually get from Sam's Club are electronics, laptops, computers, cameras, iPhones. So I just got an order in, and I just wanted to share with you guys how to go about leveraging vendors like Sam's Club to help grow and scale your business. Now, in order to get qualified for Sam's Club, you're going to need to have established business credit if you want a business credit card without a personal guarantee. Now, as a lot of you know, Sam's Club is one of the few, if not the only institution where you can get a business credit card without having to use a personal guarantee, and it's based exclusively on your Experian business credit file. Now, this is not a starter vendor. You will need some established business credit in order to qualify. I think when I got approved, I had probably about 4 vendors reporting on Experian, and I started out with a $3,500 limit, but I've since grown the limit to $13,000. And it comes in handy, especially when I'm trying to scale out my business and I need a computer or a new laptop for an employee or something like that. So Sam's Club is very, very useful and very, very handy. And anyone can get approved for a Sam's Club credit card. So Sam's Club offers 2 different business accounts. They have a store card, which you can only use at Sam's Club, and they also have a MasterCard, which you can use outside of Sam's Club. Now, you can actually get both of these accounts. Either way, they both have a lot of value because, again, Sam's Club has so many different products that you can get at a very, very discounted rate. So definitely one of the best ones if you're looking to leverage business credit accounts. So they use your Experian business credit report to qualify you. I would say you probably need 3 to 4 accounts at a minimum reporting before you can get approved. Now, if you have more accounts established, then you may start out at a higher starting limit. Now, if you have a well-established Experian credit report, you might be able to start around like an $8,000 limit. So sometimes it's better to wait a little bit until those accounts report, because then you might get a higher starting limit versus if you only have 3 or 4 accounts reporting. All right, so before we get into the rest of the video, I just wanted to break down real quick what's actually on your Experian business credit report. Now, I know a lot of people use NAV, but with NAV, you have to understand NAV is a third-party reseller of credit reports. Experian is the actual source. So if you want real-time, up-to-date information on your business credit report, you can sign up with Experian. Now, it is an investment. I pay about $189 a year, but I can check my credit report at any time and it gives me real-time information. Whereas with NAV, they only update your report maybe once every month or so. So that's one of the big distinctions. And you get a little bit more details with this. So real quick, let's break down exactly what the business credit score is. All right, so there's 5 different risk categories. You have high risk, which is 1 to 10, medium to high risk, 11 to 25, medium risk, 26 to 50, low to medium risk, 51 to 75, and 76 to 100 is low risk. So ideally, in order for you to get approved for most business credit vendors, you want to be in the low risk. So that's going to be 76 or higher. So this particular business of mine is at a 77, which is right over the low risk profile. Now, one thing you have to understand with business credit scores, right? Even if you're paying your bills on time, you have what's called, your SIC code, your NAICS code. So one of the unfortunate things about business credit scores is that depending on the industry that you're in, your business credit score can fluctuate. So you are affected based on your industry. So even if you pay your bills on time, if there's something going on industry-wide, that can affect you as well. So just keep that in mind. But ideally, again, you want to be in that low risk profile to get approved for most types of vendors. But again, there are some vendors that are going to require a certain amount of trade lines on your business credit report or a certain amount of time in business before you can get approved for it. But I just wanted to break down exactly how this is comprised. All right, so another metrics that's used besides the business credit score is what's called the Experian Financial Stability Risk Rating. So this is basically just a metric that kind of details whether or not your business is at risk of severe financial distress within the next 12 months. Your Experian Business Credit Report also gives you a credit summary. Now, right here, they have the current days beyond term, DBT. So that's basically how you pay your bills, right? So if you're paying your bills on time, then your DBT is going to be 0 or less. If you're paying your bills beyond the terms, then it's going to be greater than 0. So 0 is actually good when it comes to DBT. Right here, it has predicted DBT for May 5th, 2021. So they're predicting it. Now, as I was saying, these predictions are based on things that are going on within your industry. So there could be, certain macroeconomic type things that go on that will make a certain industry more high risk at a given point. So even if your business is still doing well, still paying your bills on time, if other businesses in your industry with the same classification code is doing poorly, then that will have a negative impact just based on the predictions for DBT as well as with your business credit score. So with business credit scores, some things are outside of your control that will affect your business credit score. Right here, they have average industry DBT 2. So that means on average, similar companies with the same SIC or NAICS code, they're paying their bills 2 days beyond term. So that's not a good thing. Right here, they have the number of payment trade lines and lender consortium experience, inquiries, as well as UCC filings. So down here, you can look at some of the other trend information they have. But right here, they have basically the trade payment information. Now, with business credit reports, they don't actually name the particular account. So you kind of have to infer based on your knowledge of what's on your report. Now, I could tell you, for example, right here where it says warehouse, I know for a fact that this is Sam's Club because I had a balance of $400. So you kind of have to infer. Sometimes it's not as apparent, but if you know the trade lines that are on your business credit report, you can identify that. And then right here below, they have lender consortium experiences, financial exchange trades. So this is just additional data. Usually this is going to be like business credit cards and stuff like that. And then they also have other trade experiences, additional trade line experiences, payment trend detail. Now, this is based on like a month over month. So they have industry DBT, your actual DBT of your company, and then the industry current percentage. So right here, as you can see, my DBT is perfect, no late payments. But within the industry, you can see it's actually gotten worse since February. So it went from 1 to 2. Another little secret is that Sam's Club also offers jewelry, which comes with GIA certification. And so usually if you go to like Zell's or Jared's, they don't actually have graded stones. And Sam's Club offers a very discounted rate when it comes to the jewelry. So you're getting a higher quality at a lower price. Now, they don't have the top shelf type of quality of diamonds and jewelry, but it's going to be better than if you went to Zell's or Jared, because as a lot of people probably don't know, those mainstream jewelry stores actually have ungraded stones and they mark up the price tremendously. Now, one of the great things about technology is that it has a very high ROI. Now, I have this old iPhone 6 and I've probably been able to generate hundreds of thousands of dollars just through the iPhone. So imagine getting different electronics and computers, camera equipment, whatever you might need for your business, getting it at a low price without having to put up any money out of pocket. The ROI is just tremendous. And again, these are revolving credit accounts. So you can get access to these different technologies, whether that's computers, laptops, printers. They have a wide variety of different items. They even have vending machines. So you can get a vending machine for your business. Or if you wanted to get into the vending machine business, you can get that finance from Sam's Club and actually get the products that you need to put into the vending machine. So there's a lot of different ways that you can leverage a Sam's Club credit account in order to generate revenue or even help grow and scale your business. You could also even do retail arbitrage if you wanted to get creative with it. Anyways, I wanted to show you guys some of the things that I've been able to do. I just got a delivery in from Sam's Club. So one of the things that I was able to get was this is an iPhone, not the latest iPhone, but you know, who cares? It still works. And I got a nice HP laptop from Sam's Club. No money out of pocket, right? I just put it on the Sam's Club credit card. And I got another laptop as well from HP. But the whole point I want to make is that you can use and leverage these different business credit accounts to help grow and scale your business. All you have to do is build up some initial business credit, and then something like Sam's Club, there's so many different ways for you to leverage it. Whether you're getting technology, whether you're getting vending machines, whether you're doing retail arbitrage, right? Because there's certain things that are in the Sam's Club store that you can't get online. So, for example, I got Under Armour apparel for a very discounted rate. I got backpacks for a very discounted rate. So there's a lot of different ways that you could leverage these business credit accounts to create value, to create income. So I just wanted to share this quick example of one of my favorite vendors and why you should definitely leverage Sam's Club, because you don't have to personally guarantee the account. Even if you have terrible credit, you can build business credit. Of course, it's going to cost you a little bit, but if you build that initial business credit, you can go out and get an account like Sam's Club and then leverage it in order to help grow and scale your business. So that's all I wanted to cover in today's video. Until next time, take it easy and we'll talk to you soon. Peace.